Let's try that again. There we go. Happy 2023. It's good to be back. I know the webcam's looking a little weird. I don't know what's up with it, so I didn't have time to fix it, but I'm a little dark in the face. There you go. The computer always throws a technical issue for me at the beginning of the year. That's totally fine. But yeah, I hope you guys are all doing well. Welcome. Glad you're here. Glad to be back. Let me adjust the chair. Hold on. Glad to be back after a little 3-week stint in Blighty, or England, as we say. Lots of gray skies, some rain, a lot of wind, a couple of days of sunshine, but all in all, good vibes, you know. One of the things I noticed when I came back to England, I haven't been for a little while, was how friendly everybody is. I don't know if that's because people have been confined due to the lockdowns and they're just happy to be out and about, but I was happy, you know, and people seem to be generally happy. I'm a little bit too tall. There we go. People seem to be happy. It was nice to be back, but of course I missed the Thursday stream, of course. Had to do the whole family thing, and I thought, you know, it's good to take a little bit of time off. So I'm back anyways. We're going to be talking lots of peer-to-peer lending tonight. Go ahead and hit the thumbs up whether you love the stream. If you hate it, whether you're indifferent, please hit that thumbs up. It helps out a lot. And we're going to be talking about some of the companies that have announced good profitability reports with their annual accounts. A lot of good news, actually. A couple of little bits of blemishes. We talk about a company, of course, that is closing its doors to retail peer-to-peer lending in the line of succession of companies that have decided there's just not enough money and there's probably a lot of hassle in the retail side of things of peer-to-peer lending. So another company deciding to go institutional. We're going to talk about that. We're going to do a quick trading 212 update because I tell you it's been a rough last 6 months with the portfolio. So I'm going to show you how that is faring. Talk a little bit about inflation. A lot of peer-to-peer lending news. A lot to get to, but we're going to be having guests. I know I keep saying that, but yeah, we're going to have Propland will be coming on the stream. Ryan Bartaby, I think in January, hopefully, if not first week of February, and Folk to Folk, and probably, even though he doesn't know it yet, Mike Bristow from Crowd Property. We get him on the stream. And kind of interested to get Robert from Plend back on the stream, see how things are going, because I see a lot of good reports about how their business is going. So, and generally I want to know about what these CEOs are thinking about the retail side of things, because obviously with Assets Capital pulling out of retail peer-to-peer lending after, you know, Stuart Law told us, well, I'm committed to retail, I'm committed to it, and then pulling out. Sometimes you cannot believe everything you hear, so we have to take these words at face value. But it'll be interesting to get these people who are running the companies, their feedback, their thoughts about retail, and whether they're going to continue with their business to, you know, continue to support the retail sector of peer-to-peer lending. I tell you, when I was in the UK, I managed to score a pretty good 1-year fixed rate bond. I think it was 4.5%. So there was some really good fixed rate bonds out there from banks, but they didn't last very long. As soon as I got it, I saw, I think about 3 days later, this was Ford Money, the bond was filled up and finished. So yeah, that was interesting to see the bond rates are starting to rise on fixed 1-year rate bonds. But anyway, let's get into it. We'll do a quick hi to everybody. Alan Toombs is chucking it down in Basingstoke. I tell you, I do not miss the rain. I don't mind the wind. I can deal with the cold, but the rain, even though it was, when I was there, it was kind of sprinkly, it's still kind of annoying. Patty is here in France. Bonjour, Jeff. Happy New Year, Mike Powell from a wet and windy Southampton. Elvis is here, very famous. Thank you very much. Where are you, Elvis? You're in Memphis, of course. Where else would you be? Mark Mason is here in Surrey. Dave Dawson, looking for a better 2023 for investing. I'm not sure about that, but we'll see. Happy New Year. Says Elvis. Alan Stratford is here. Of course, this is the first stream, by the way, of 2023, so you guys have probably missed each other. Hi, Paul and Paul Bagworth, and I think Kenilworth. Am I right on that? Norman P. is paying it down in Sussex. Norman P. is paying it down in Sussex. Colin Perry in the Peak District. Peter Vince, of course, is in Leatherhead. Says, I hope you had a wonderful Christmas, Lawrence. Yes, I did enjoy my visit back home. Stephen Hale in Nottingham. Annabelle Nyron is back in sunny Spain. Lucky you. This must be a nice place to be. Oliver Jones, hello. Arrival, I always say, oh yeah, we've got it. That seems like a spanner. So I think we're going to have to get rid of you, Oliver. Sorry about that. Somebody pushing some, oh, maybe, I don't know. Oliver Jones, are you a scammer? Are you a crypto, are you a crypto spammer? Hi, Robert Pates in Hornchurch. I have to have a look and quick see what our arrival is. Sometimes I get spammers in here that are pushing cryptocurrency. Maybe you're not a spammer, Oliver. Sorry about that. You're not. Arrival is a British electric car manufacturer. So, yeah, up 100% today. So if you were in Arrival stock, you were doing pretty well. Let's kick right into the peer-to-peer lending news. Again, thanks to everybody for joining. Please subscribe to the channel if you're not subscribed. Thank you to all the Patreon contributors. You are very loyal, and I very much appreciate each and every one of you. It's going to be a tough time for peer-to-peer lending in 2023, but a good time in other ways. So I'll talk a little bit about that. Let's get right into it. There we go. Narinder from Cufflink. He says he's had a record 2022. Cufflink has doubled its profits in 2022 after a record year of lending. During the 12 months ending 30th of June 2022, the Cufflink Group, which is a parent entity of Cufflink Limited and Cufflink Bridging, reported a post-tax profit of $729,000, up from $465,000 to $462,000 the previous year. This is really good news. We want to see peer-to-peer lending companies making money, because the more they make, hopefully it means that the business is in good shape. And we've had enough failures to last us a lifetime, so let's not have any more. Based on these numbers, Cufflink is forecasting a profit of $1.8 million for 2023, $4.6 million in 2024, and $8 million in 2025. That is some pretty big expectations, but I really wish Narinder the best, and I hope that they definitely achieve that. And they're saying December was a fantastic month for them as a business. He added that by the end of 2022, the platform had logged profits of $1.1 million for the 2023-2022 financial year. This is a big deal after looking at so many accounts that have been in the red for so long. I really like to see this type of good news, because I know a lot of the times we have kind of bad news because of all the crap we've been through, all the poo that we've been through in the peer-to-peer lending space, and this type of news is really good to see. And I was reading the Cufflink update that was sent out at the end of the year. I didn't get to talk about it because it happened while I was away in late December, but they have reached Cufflink over 235 million invested. It's quite a lot of money if you think about it. Also, Narinder was named CEO of the Year at the Peer-to-Peer Finance Awards, Investors' Choice, Bridging Lender of the Year. They had 0 losses to date. They certainly paint a very rosy picture. There's a couple of, they said that they've temporarily stopped second charge mezzanine loans, but we'll have plenty of loans coming on the platform in 2023. They also have a new cashback incentive they've launched on their auto IFISA cashback offering. I didn't think that these companies were allowed to do that anymore, so I'm just wondering if that is finished now. And I think in January, those kind of bonuses had to stop. So that was interesting. And they're making some changes, I would say upgrades to the platform as they, just become better at what they do. And they're doing a bunch of auditing on their accounts. So really good news for Cufflink. And yes, I am still invested in them. Not financial advice, of course, I have to say that. Investor update, Assets Exchange. They had a really, really good year of 2022. In August, they hit the milestone of £1 million of paid interest to investors, and they're looking to break 1.5 million next month, which I'm presuming is January of 2023. Their investor base grew by 63%, and they continue to provide stable income. I actually like what Assets Exchange is doing. There's a good type of community feel for the investments that they offer. They're helping the community and providing investors with a way to get returns that makes a lot of sense. Again, with Assets Capital exiting the retail market, we still see Assets Exchange continuing to offer support to the retail market. So that is very good. And they also want to thank you retail investors out there, for investing through them. Rebuilding Society reports below average December on the other side of the coin. Rebuilding Society, I think, has kind of struggled in their peer-to-peer lending side. Lenders saw a net loss of 30,920 during the month of December, which resulted in an annualized loss rate of 17.51%. That's not great news. It says, however, Rebuilding Society said that the net return rate for the lifetime of the company remains at 5.65%. I have reached out to Daniel. Is it Daniel? Yep. Daniel's the CEO of Rebuilding Society. I offered for him to come onto the stream. I've always been pretty hard on Rebuilding Society. He has said that he would like to come on the stream. He did ask me to wait. He has some interesting things, I guess, happening mid-January, so I reached out today to, again, extend that invitation to him. We'll see. Hopefully get him on the stream. I'd like to talk to him about, what's going on at Rebuilding Society, because those numbers are not great. Axia Funder, somebody else who we've had, Cormac Leach, on the stream before. They have become directly authorized by the FCA. Before they were running through a appointed representative, so they are not directly FCA authorized. They are a litigation funding peer-to-peer company, which I think is a really interesting space and sector to be in peer-to-peer. It's something I never really thought that law firms needed funding and financing, but I guess they do when they have to go to trial and things like that. So they have become directly authorized, which is good. It says that it should enable £1 million of funding per month by the end of 2023, which provide significant free cash flow to reinvest into developing the platform. Now, FCA regulation is expensive and tough to go down, but they've obviously done their homework and decided that is the best way for them to go. Now, we see on the other coin, the other side of the coin, Archover has exited the retail peer-to-peer lending market. They're going to go for institutional money, same thing that Assets Capital did. And they have cited rising costs and FCA regulation as being the reasons why they decided to exit the retail peer-to-peer lending space. They are not accepting any new retail lenders now effective immediately. The platform blamed costs from regulation as well as ongoing economic volatility for their decision. Our focus to date has been on peer-to-peer retail, but costs from regulation alongside unpredictable lender appetite during these volatile times means we need to move to a model that gives us volume and security of funds, and that means institutional money. Very interesting statement. It's something that we talk about a lot on the stream, is the difficulty of retail peer-to-peer lending, about this balance of demand and supply, how much lending money there is given by investors like me or you in order to fund the loans that Archover commits to, not only Archover, but any peer-to-peer lending that they commit to give out to borrowers. If there isn't enough money from people like you and me, that creates a big misbalance and a big problem for the peer-to-peer lending companies. And I think some of these companies are just realizing how difficult keeping that balance correct is. And hence, if they have institutional funding lines, they don't have to worry about Uncle Joe not putting in enough money for them to be able to lend out to a borrower that they've committed to. Also, FCA regulation, is expensive and it's difficult and it's very heavily scrutinized now. I think a lot more than it was 5 years ago. Archover, I don't know, how big their loan book is. I've kind of looked through their statistics. All I can see is that they've lent 161 million to UK businesses, I think since 2014, and pretty good average interest rates here, returns for investors of 9.39%. But unfortunately, that is going to come to an end. So if you're an Archover investor, good night. Lendy administration to extend deadline again. Wow, what a surprise. I've said this in the past. I expect that this will continue to be extended. Lendy administrators, RSM, are expected to request another extension to the administration deadline as their bills top £5.2 million, whopping amount of fees that RSM is collecting through the Lendy administration. In the latest investor update, RSM noticed that the administration process was previously extended by 36 months to midnight on May 23rd, 2023. We all knew that there was no way this administration was going to be wrapped up by that date. Of course, they're going to go back to the courts, ask for more time. More fees will be generated. As we can see in the report, RSM revealed that a further 409,315 have been charged during the 6 months ending 23rd of November 2022. And that compares with bills of 328,000 charged during the previous 6 months. The fees have reached over 5.2 million. Just 2.4 million has been approved for payment. I hope that, I know that a couple of you are in the Lendy action group. I hope that, these fees are going to be capped at some point, because it just seems like, RSM could just keep continuing the administration. I understand the difficulties that go through the administration of a bankrupt or out of business company must be very, very difficult. However, there has to be some limit on the amount of fees that these administrators can charge. Otherwise, they could just keep extending it on and on and on. And it's a great payday for them. I mean, £2.2 million in generated fees into RSM's pocket. That's great for them as a business. I wouldn't mind that. And Lendy distributions have resumed. If you are a Lendy customer who has been worked over by this company, you will find that if you log into your account, there may be some money sitting in there, and there will be a new batch of distributions coming shortly, as they've had a court case resolution as part of the distributions that has become settled now, and they're able to go ahead and pay out some money to investors. I get asked this all the time: how much money do I think that Lendy investors are going to get back? We can see one of the reports here, DFL 005, gross asset realization of 905,040, with, look at this, total costs deducted at source 338,000, and costs out, third party costs another 70, costs paid by Lendy direct 58 grand, which means a retained balance of 153,000, an interim distribution 65% of what is going to be paid out as a distribution. So what is that? 385, 420. So we're talking about maybe 45% realization, which, if I'm reading these numbers, is not too bad. What do I think is going to happen? I think probably realistically 15% recovery for investors is about what I would expect to get, and that's unfortunately not very good news. But I guess you have to look at the bright side and say, well, it's better than 5%, and it's certainly better than 0. But it still sucks. I mean, anybody that put money into Lendy, myself included, who takes a 85% haircut is not going to be happy about that. But that's what I think we can reasonably be expected to get back. So not great news. LendingWorks losses widened before peer-to-peer exit. This is what I had talked about in the years prior, that LendingWorks had lost since inception, approximately 5.1 million pounds. They were just not doing well, whatever it was that was causing them to lose so much money. It just was not getting any better. So they rebranded, obviously exited the retail peer-to-peer lending space, and it seems like they kind of knew the writing was on the wall for that business, saw that the losses were getting bad, and searched for somebody to invest money, inject money into the company and rebrand, get rid of the retail side. The consumer lender, LendingWorks, reported a loss of £2.9 million in the 12 months to December 2021. And that was up from a loss of $1.2 million in 2020 and $1.8 million in 2019. Look, the company just wasn't making any money. It happens to a lot of peer-to-peer lending companies, a lot of startups in general. Alt-fi companies don't always make money. They got a lot of costs for staff, technology, regulation. LendingWorks unfortunately was a victim of that, and thankfully, I think most people are going to get their money back, so that's a pretty darn good result. Crowd Property credits Birmingham base for second year of profits. According to the company's year-end financials, Crowd Property returned an operating profit of £147,000 during the 2021 and 22 year. And the platform said it expects to post another profit next year. Again, I know I hop on these company filings a lot, but I think you have to look at the back end of what's going on with these companies to see how are they going to survive. Are they on the right path? You've got your money invested with them. If you don't know what's going on in this part of the business, then this is when we get these moments where we wake up in the morning one day and go, oh, another one in administration. But Crowd Property, I think I've been pretty happy with them. So far, so good. And they continue to head in the right direction. Of course, 147,000. It's not a huge amount of profit, but it is a profit. Also, the way that accounts are done, these tax filings, companies can move money around in very different ways and report things that, is good for them tax-wise. So sometimes these accounts are not really showing us exactly what's going on in the background, because there are ways to do tax basis that I certainly don't understand. So maybe their profitability is actually higher than what they're reporting on their taxes. Who knows? Again, just my opinion, not forced to be right or wrong. As you can see here on Company's House, I pulled up this strategic report. If you want to go and read about the finances of Crowd Property Limited, you can do that at Company's House, and it does list what's going on with the business, how they've expanded, how they've been increasing their lending and the profitability levels. It's saying in here that them being based in Birmingham has been good for them. This is the second profitable year for them, and they expect to report another profit for 2023. While profitable and robust, the business continues to invest significantly in the long-term development of the in-house built proprietary technology platform and the team and capability. So these things are expensive. Obviously, Crowd Property is putting money back into the infrastructure of their business through the technology side. These fintech companies are technology companies as well as finance companies, and that stuff can be expensive on the tech side. So if you want to go and read more about Crowd Property and their inner workings, just go to Company's House, check it out. It's pretty interesting reading. 5 game-changing moments in 2022 for peer-to-peer lending. Zopa leaves peer-to-peer. You remember that when Zopa announced that it would be leaving the retail lending space, and on the 31st of January last year, it officially closed its peer-to-peer lending business. Rising interest rates, of course. We've seen a lot of inflation pressure and assets capital winding down its retail book. That was, I would think for me, that was the biggest shock of 2022. I was really not expecting assets capital to close the doors to peer-to-peer lending. So I definitely think that should be number one on the list. Well, maybe number two. Maybe Zopa being number one assets capital number 2. I was expecting Zopa to exit retail at some point. Assets capital, not so much. And Crowd Property reaffirms commitment to retail lenders. So Mike Bristow, CEO, is saying we want to continue to support retail peer-to-peer lending as some of the other companies exit the space. Crowd Property says it's seen exceptional demand from investors. And if you're an investor through Crowd Property, you'll see that loans get filled very, very quickly. There's an interesting news report that came out on January 11th. And I've been waiting for a piece of news like this because it just is set up in certain countries for this to happen. Sweden is facing its day of reckoning as house prices plummet. House prices in Sweden have risen reliably for over a decade, but now they are tumbling. Some economists anticipate a 20% downturn in property prices from peak to trough. Sweden's property prices are facing a serious drop as the country's former central bank governor warns of lofty household debt levels. House prices in Sweden have risen reliably for the last 10 years because of the ultra-low interest rates, but of course we're seeing now these higher interest rates sweeping in. And this is exactly, what we would expect to happen in a high interest rate, high inflation environment, especially where we think a recession is in place. And I think this is kind of maybe the first domino effect that we're going to see that will domino effect into other countries reporting exactly the same situation. I've seen it here in the US as house prices are starting to cool off. We got these higher interest rates of now, 6.25% to 7% mortgage rates now, which, you don't have to be a genius to figure out that if you are paying a £1,500 mortgage a year ago and now your mortgage is £2,500, it's going to put a lot of pressure on people, right? Financially, it's a big jump. So we're seeing it in Sweden. I think we're going to see it in other countries. And this could be what really, downturns the economy and possibly the stock market at some point. We've been waiting for this stock market day of reckoning to happen. Everything is set up perfectly for it to happen. But it just hasn't happened. We've had a very stagnant couple of years for investment sides in the stock market. We've seen this very high levels of volatility. But this news is, I just expect a lot more of this type of news to be coming out in Q1, Q2 of 2022. The U.S. released its CPI numbers, its inflation numbers, and saying, oh, this is great. Inflation is cooling. We got a 6.5% inflation rate now for all items, including food and energy. We have the UK CPI inflation numbers coming out on the 18th of January. I expect we might see a bit of a pullback after that ridiculously high, what was it, like 10% inflation report, the last one that we had for November of 2022. We see the U.S. pull back from 7.7, was it? But we also see crazy things happening in the energy. Overall, energy in the U.S., 41.5% inflation, but for December we saw it minus 16.6%. Reason why I watch stuff like this, I think it's important. I think whatever happens in the U.S. is kind of looking into a crystal ball of what we're going to see happen in the U.K. They just happened, the U.S. put out their CPI numbers earlier, but yes, we are definitely in a recession. We see some things continue to increase in the U.S., including apparel, medical care, commodities, service less energy, services, shelter, transportation, medical care services. We've got a 3% increase in utility pipe gas services. So, some things are still continuing to be high on the inflation charts for the U.S. Just take a look at the trading 212 portfolio. It has been rough. I've been at a little bit of a scratching head moment with this portfolio. It's like, what can I do to give this portfolio a bump? Because ultimately I want this portfolio to make money so I can donate money to Dr. Paula's foundation and to Forest Home, hospice down in Poole in Dorset where my dad was housed. But this portfolio is just not making any money at the moment. You can see we're minus 1375 now. These numbers don't always show everything because there's been cash outs. The portfolio has moved to cash on several occasions. And what's under pressure? Well, Calera was doing really well and then absolutely fell backwards, as you can see from the chart here. If we look at where were we at? We had a high of almost 147, so we pulled back to 66. I mean, that's crazy. And had it jump up to a little bit over $1 back down to 99 cents. So we're about 12% in the red at the moment. The nasty one right now that is not doing well for the portfolio is Vermilion Energy, down 24%. And Zim, shipping services, down 31%. Now, Zim is one of those companies that pays a ridiculous dividend. And I think it's 160%. It's nuts. Or is it 16%? It's a lot. It's a lot. And this is a good example of how people chase dividends. Some stocks are not as volatile as Zim. But one of the definitely attractive things about Zim is this dividend that they pay out. Of course, when the dividend gets paid out, the stock falls. That's just part of the nature of dividend-paying stocks. But it hasn't recovered. This is the problem. So we're down from 27 dollars all the way down to 17. So that's a good amount of a back turn. Now, as you can see here on the history of Zim, we got a £132 dividend paid on the 8th of December, which is that's big, right? That's a big dividend for a company. But the problem is when the stock is falling down 20-30%. Doesn't really matter what that dividend is. Now, there are dividend stocks that are, again, not as volatile as Zim, but this is a stock that I had put a lot of faith in and has done really well for the portfolio in the past. It's the Israeli shipping company, but it's just not been performing. One that has been a bit of a bright spot, Deutsche Bank, up 18.5%. Flex Natural Gas, this one has fallen back too, from 37 down to, and all the way down to 29. So at one point this was up about 45%. Now is up 28.6%. So I'd say that's a win. Norwegian Cruise Line is not doing very well, down 10%. Disney kind of not really moving much, 3%. The one that regret that I have is Alibaba. Alibaba has been kind of on fire, and it was in the portfolio at one point. You can see, of course, the one stock that was ended up ditched out of the portfolio went from 63 all the way up to 113 US dollars. So again, a problem with trying to individually stock pick is why I tell people just invest in the index trackers. It's so much easier than dealing with this nonsense, because likely what's going to happen, you're going to buy in here at 121 and watch this thing sink down to 99, get a little bit of false hope down to 90, a bit of false hope at 99, and then just watch it go all the way back down. And what's going to happen is you're going to sell because you're going to get annoyed and your emotions are going to take over, which is what happened to me with Alibaba. I can't remember when we sold it. It was quite a while ago, but you can see, we've had a pretty big fallout from when Alibaba was 300 US dollars. So big drops. This is why investing in individual stocks is so difficult, because the emotions take over. And sometimes the brain goes, this stock is never going to come back. See, when I'm watching it go down, and I'm thinking this stock is not coming back. And of course, what happens? Boom. From here, 60, almost doubling. So if you really believe in something, you just have to hang on. Don't make those mistakes of trying to time and move in and out of these stocks, you're going to make those timing mistakes that are going to cost you some moolah. Still sitting on a little bit of cash in the portfolio, £4,000, and honestly, I'm just not sure at the moment, the way the market is, where that money should go. Because I just feel like we are going to continue to just sort of go sideways until these inflation numbers really start to come down, and then maybe the interest rates start to ease. And then we'll see some moves in the stock market if we don't see this big correction, which I think is coming at some point. I really do. Where's the crystal ball? Crystal ball is gone now. It's not even on the desk anymore. I think the dog might have eaten it, but it's just so hard to say. And what do I think is going to happen for 2023? Well, peer-to-peer lending, I think we're going to see a continued consolidation of those companies that are not able to turn profits. But I think the companies that are in business and are doing well are going to continue to thrive. Which ones? Look, I think if they're in business today, most of them are going to continue to thrive. I'm not going to call out any names because honestly, I really don't know. It's hard to know what's going on behind the scenes, but all I can do is get those representatives on the stream and ask them questions, which is what I'm going to hopefully do when we have guests. I'm excited to get Propland on here to get their thoughts on these closures in the retail space, find out what their business plan is for 2023. I think they're one of the players that's been really consistent. Blend Network, again, I got to take assets off the top 5, of course, because they had fallen. Assets was high on my top 5 at one point, but I had seen what was going on and kind of reduced them down, and hence forced them closing their doors. But it's really the same companies, the ones that we follow. Probably you could throw easy money in there. They seem like they are doing a good job. Crowd Property, Cufflink, LoanPad, Unbolted, slow and steady, continue to do what they know. I'm sure there's other ones out there that obviously I can't cover everything because I tend to cover the ones I invest my own money in, and there's just too many of them to invest through for myself. I can't handle it all. There's too much to keep up on top, but generally the ones I invest through I think are still doing well. And I guess my hope for 2023 is that we don't see more closures, certainly no bankruptcy, certainly no administrations. Is it going to happen? Probably. I'm sure businesses, they go out of business sometimes. It's just the way it is. No different in the investment space. As far as 2023 for the stock market, prediction is I think we see Q1, Q2 just kind of running along volatile, up and down, until we see some inflation cooling, some cooling of the interest rates. I think once that happens, maybe you start to see the stock market get a little bit more health behind it and run through maybe Q3 of 2023 is a good one. In the meantime, I'm just looking for opportunities in sort of like fixed rate bonds and things like that. If you pick up a bond for a year for 4%, 4.5%, it's not terrible. And just go from there. So that's my prediction. I don't know. We'll see. Of course, I'm here most Thursdays, nearly every Thursday, to provide you with the latest news. And yeah, that's really about all I have for you this week. I look so. Why am I so dark on? I feel like something's happened to my software where I look really depressed. It's some kind of a depression preset where it's put me in this really gray state. You can't even see the poor little dog. I mean, she's back there. Oh, she's back that way. You see, she's in there, but you can't see her because it's so dark on the screen. This is the way that the brightness is supposed to be, so I pumped it all the way up, but it's still not doing so good. All right, let's see. Oliver Jones, you're not a spammer. Sorry, yes, I know. Oliver, apologies about that. What happens is sometimes we get people who are coming here pushing cryptocurrency in the comments. And I just, when you said ARVL, I thought it was some kind of crypto thing. So you're good now. You're good. Annabelle says, after 3 weeks in soggy Dorset, I'm indeed very glad to be back. I know, I was there in Dorset. It was a soggy time. Cashback banned from March this year. Yeah, LoanPad sent me an email and said cashback stopping December of 2022, January 1st, I believe. So I guess every company has their own way of doing it. Oh, there was one other story that I missed on here. I think it was interesting. Let me pull it up. I might have ditched it because there was too much news this week and I wanted to not to be so focused on it, but let me just find it. It was interesting. Oh, here we go. Let me pull this up for you. See, if you hang on till the end of the stream, you get an extra tidbit sometimes for all of you that have left. Assets Capital co-founder Andrew Holgate has revealed plans to launch a new lending platform under the Equitivo brand sometime this year. They will focus on lending to small and medium enterprises and the short-term non-regulated real estate market. What I find interesting about this was down here. The House Crowd's former Chief Operating Officer Carl Davis has joined Equitivo as a co-founder and Chief Operating Officer. Simon Challenor is co-founder and CTO, and Jeff Jones is the co-founder and in the chair. So you picked the House Crowd's former COO to be a part of this. That was interesting. Look, I do not know anything about Carl Davis. I do know some things about the House Crowd, and that has not been good things that I know. So very interesting that Carl was chosen to be a part of Andrew Holgate's team. And Andrew, I do respect. I think he's a smart guy. We've had him on the stream before. There must be a reason why he decided to have Carl join. I wonder what Carl knew about the House Crowd and how that was going. Maybe he didn't know, but you'd think a chief operating officer would know things. I mean, they're in a place of power. And that was interesting to me. So I did reach out to Andrew Holgate to ask him if he wanted to comment on the launch of this new lending platform. But so far, I have not had any reply. So we'll see. Cashback ban from next month. Okay, thank you. Hi from a windy Sunderland, Anthony English. Great name for somebody who lives in England. That's cool. Mike says the peer-to-peer financial news article is nonsense. Distribution started the week before they published. Okay. You can't always believe everything you read, right? Realization on DFL 005 is 5%. Lenders got a 3.8%. That's not good. I still think you're going to get 15% back if I had to take a educated guess. So you're gambling on the ARVL stock. Yeah, I don't know much about that. Maybe you'll hit a home run if it goes to $4. Yeah. This is my top peer-to-peer 5 right now. I still say LoanPad, Cufflink, Crowd Property. Who goes in as the assets capital replacement? You see, I want to put Blend and PropLend on there, but I don't invest through them, so it's a bit of a tough one. But I think they definitely should be on the list. Yeah, so really LoanPad, Crowd Property, cufflink. I think Unbolted probably gets a vote. Yeah. Mr. Gloomy, I am. Not intentionally. I'm feeling pretty good. I don't feel gloomy. Oh, what are my thoughts about Andrew Tate? Oh dear, you really want to go down there? Who knows? If he did something that he's being accused of, I don't know. Romania, I would imagine, is a pretty corrupt system, and it's not somewhere that you want to get arrested. Some of the things Andrew Tate says are obviously showmanship. I think he's a guy who knows exactly what he's doing. He says things that are outlandish to gain attention. If you don't know who Andrew Tate is, go Google him. He's all over the internet. But I don't know. I kind of feel like he's been set up. So, some way. I don't know who set him up or why, but it feels like a bit of a setup. I can't imagine somebody that is very publicly outspoken doing the things that he has been accused of doing. That doesn't make any sense to me. If you were running criminal activities like that, you're probably going to be very quiet. The guy is extremely intelligent, very smart, so we'll see what happens. I think he says some ridiculous things sometimes. I think he says some really good things sometimes about, you know, people trying to be the best that they can become. But yeah, we'll see. Annabelle, very worried about assets capital. We'll see. I haven't talked about crypto. Well, crypto is it's like a dormant sleeping bear at the moment. It's just doing what I think it's going to do for the next couple of years. I'm still buying Bitcoin every month like I have been doing for a while, because I think if you believe in something, you kind of stick by what you know, right? And as far as I could tell, nothing in Bitcoin has changed fundamentally. Now, I will say if Coinbase fails, that's going to be a big problem. Without really any way to, you know, Coinbase is based in the US, so it's important that they survive and that they do well, because they're really the last major company to survive. I think they will survive. I think they'll be okay. Of course, they're going to have problems. We're in a crypto winter. They're going to have to lean up their business in order to survive, which I think they're doing. But yeah, if you own cryptocurrency, take it off the platforms. You know, everything that I own is on a hard wallet now. I don't hold anything in Coinbase anymore because nothing is surprising me at the moment. But I think ultimately, I have a good feeling that Bitcoin does well in the future and survives. I have no crystal ball. It's risky. It's volatile. If you don't like volatility and risk, you shouldn't be in crypto. Perhaps we can get Andrew Tate on the stream. I don't think he's going to come on this stream. Yeah. What about Invest and Fund? Also, Folk to Folk, I think, you know, I'm interested to learn more about them because they seem to be another company that I've heard good things about, and I'm looking forward to getting them on the stream. I don't think they're going to be here until March on the stream, but they are. You know, I've been talking to the rep over there to get the CEO on the stream, and we were supposed to do it in January, but they've asked to be rescheduled to March. So keep watching. I have reached out to Invest and Fund too, and a couple of other people. I'm still just trying to get dates scheduled out. You know. Anyway, let's get out of here. Thank you very, very much for joining. I love you guys. Thank you for being here. Yeah, hit the like button if you can before you leave. Have a great evening. Enjoy your weekend. Hopefully the weather is not too wet. It's 23 degrees and sunny here in Orlando. Sorry I had to do it. But I will see you guys next week on Thursday. All being well. Thank you for joining. Good night and God bless. Bye.